Hey everybody, welcome to the weekly wrap up here at Verified Investing. My name is Gareth Soloway, Chief Market Strategist. Now, we did see a pretty interesting week. It started out with CPI that was somewhat muted and followed up by PPI that had a huge jump in inflation. All right, now again, I've explained this to you guys before, but understand when you have tariffs, inflation first affects producers, which is the PPI data, producer index. And over the next 3 to 6 months or more, those producers start to pass that inflation through to the consumers. So, not surprising to see CPI muted, but then see a sharp jump in producer side inflation. Next week, we're looking at Jackson Hole. That's the big symposium for the Federal Reserve. Jerome Powell will make a speech by week's end, and that will be very interesting to see what his guidance is on when the Fed will cut rates. Markets are pricing in 2 rate cuts into the end of the year. And the first one is slated per the market for September. All right, let's get into the market action here by looking at the charts. As always, remember, verified investing is all data, all charts, no BS. This is your intraday S&P. We opened higher today, a very sharp sell-off for the first 20 minutes, and then the rest of the day has just been a sideways chop. Not a lot of price action there. Remember, we are in mid-August. And mid-August, again, for big money institutional investors, they generally take off. They're in the Hamptons or they're in their beach houses with their families before the kids go back to school. Now, listen, if something crazy happens, they can obviously log in from their remote workstations. But for the most part, they leave early on Friday and they come back Sunday or Monday to get back to the action. All right. Now, on the S&P 500, we are again down on the day. This is interesting because what it shows us here is a daily chart that is stuck between two levels, right? So again, we have this parallel channel that starts here and connects through this low. And again, just to show you guys, perfect parallel, right? This trend line, we drag it up to this exact high right here, right there. And then we drag it up here, it hit right there. And again, we broke above it. But if you know the confirmation signal, you know we have not confirmed a breakout above this yellow trend line. Yes, we're trading above it, but again, don't trust moves that don't confirm. I've seen too many times and experienced it too many times where the bottom falls out before it confirms. In addition, we have this beautiful secondary trend line here. In fact, I'm going to change the color on it to orange so it really pops out. We can see this low here again to the August 2024 big collapse low. And then we come right through here. We broke down during Liberation Day, made our way back up, tagged it on the gap up a few Thursdays ago, and then sure enough, this past Wednesday, we tagged it again, and price stalled out. So again, we're sitting right into this range, which is resistance on the S&P. We would need to clear this upper trend line to really have that next target of 6,700 come into play. Until we clear that upper trend line, or if we clear it, that would be the determining factor of whether or not myself goes into a near-term bullish bias versus where I am right now that is near-term bearish. Okay, now just to reinforce that, take a look at the NASDAQ 100. The NASDAQ 100 is the short-term parallel, looking beautiful here. And again, just to show you guys, for those of you newbies out there, connecting these lows, 1, 2, and 3, and then dragging up a parallel right to these recent highs right here, here, and here. All right, and then notice how we just tagged that high and the NASDAQ 100 has pulled back. Now, there's one chart I've said you need to be watching because when it breaks down, that's when the market can break down. If it doesn't break down, the markets almost have no chance of breaking lower or significantly lower. Now, what chart is that? That's the Nvidia chart. Let's take a look at that and see what it shows us. So here's your Nvidia chart. And I'm going to even remove this top trend line. Doesn't even matter. It's all about the lower trend line. This is your April 7th low. Okay? Now, again, right there to here and all the way through to this low, to this low. And this is what's catching my eye today. Now, remember, just because it closes lower does not mean it is a confirmed breakdown. It must confirm on Monday. So, yes, we're getting the first stage of a breakdown, but I'm not going to trust it until we see confirmation. But Nvidia, this would be the first daily close below this trend line, and that's something to keep an eye on, guys. Absolutely, that's got to raise your eyebrows just a little bit to monitor. All right, next up, we have to look at Microsoft. Now, Microsoft is a very interesting chart here because we have this major trend line that the price was following going back to May. And May again, all the way to June, into July. And here we are in August, hammering on it and then breaking below it. Now, same thing like Nvidia. It closed below a few days ago, but has yet to confirm a breakdown. So again, what we're setting up for is very much a major pivotal week next week on a lot of the big cap tech names. Are they going to confirm and continue to break lower, or can they get rescued by retail or institutional money coming in and buying them back above these levels? But this chart with Nvidia to me is very, very significant. Last thing I want to point out is that you have this parallel trend line here, another parallel, the exact lows right through here and here. And then notice this high, and where did Microsoft top out on its earnings? Right into that level, and it collapsed all the way back down, giving up those gains. All right, lastly, I just want to show you Meta's chart. Meta has behaved very well. This one is not near a breakdown level. In fact, it's up into resistance. But again, you can see this longer term trend line. So yes, Meta has resistance, but notice how this one is one of the few, in fact, probably the only one that does not or is not near a breakdown line. And that tells us how strong Meta has been. Now, listen, Meta is at resistance, so we have to see if it can break through here. But again, this one is not unlike Nvidia and Microsoft, which are basically getting below the trend line. You see, this is still quite a ways away. Then we look at Google. Now, this is an interesting chart because Google's not making a new all-time high, but take a look. It did fill a gap. So this is a gap fill of resistance. The high today went to exactly where it closed on February 4th, 2025, before it had this huge gap down. Now, in technical analysis, when you fill a gap, usually this is resistance. This would also be known as double top. And so the idea is, based on this chart, you would expect a pullback on Google in the coming days. Remember, I generally focus on the near-term moves versus where Google/Alphabet's going to be in 3, 6, 9 months. For all I know, it could be way higher or way lower by then. But in the near term, technicals, which are probabilities, is favoring a pullback off gap fill and double top. Lastly, Amazon, guys, here. Amazon also filled a gap. You can see it's not even close to its all-time high here. But here you had a close and then the earnings drop. And it has now, as of the high of today, also filled this gap. Technical analysis tells us there should be resistance there and price should get rejected. I would expect a pullback next week on Amazon following that gap fill. Now, just touching base on the 10-year yield, the 10-year yield continues to push up. Obviously, the inflation numbers are detrimental and put pressure on yields. But keep in mind, just because yields are going up doesn't mean anything. You have to respect this trend line. All right, so this trend line, which was the bigger wedge pattern, this bottom line here, we closed below and we did confirm. When you confirm below a trend line, it becomes major resistance versus minor resistance. And therefore, if price on the 10-year yield climbs to about 4.36 and change, you would expect rejection. So early next week, maybe we do go up to this level. If we do, look for a pullback on the 10-year yield. All right, let's go on to Bitcoin here and take a look at what Bitcoin is doing today. Bitcoin is struggling again today. Granted, the stock market is down, but nonetheless, yesterday was a big down day on Bitcoin. In fact, you haven't seen very many days where it has flushed as much as it did yesterday. Now, it did negate the topping tail, so this power of this topping tail is no longer there. But in doing so, and then pullback, you got a double top, which is resistance, and then a very nasty reversal candle. And so weirdly enough, it closed above, which negated the bearishness of the topping tail, and it went back to neutral, which was the double top. Then it had a reversal candle here, which now brings back the negative bias. Now, not tremendously. I'm not going to say it's a tremendous negative bias, but purely talking about odds, right? That's what charts give us. They give us the power of probability, of understanding what is the most likely outcome. The most likely outcome is slightly favored to the downside here on Bitcoin in the near term for a pullback to about, and I'm going to show you this trend line. This is a new big trend line I'm unveiling. So we have this 111,700, 800 level. But this is the more important trend line that I am watching now. I'm going to get rid of this one, and we're going to get rid of this. We're going to keep this so simple. Take the low from April, the April 7th low, just like on Nvidia, right? Just like on Nvidia, just like on Microsoft, connect your lows and look at this. So this is very similar to Nvidia. The only difference is Nvidia is peaking below this trend line and Bitcoin is just above the trend line. Now let's watch and see, because essentially charts are the same. It doesn't matter. And I know everyone wants to say this time is different. I've heard that a million times. You know, it's different than .com. It's different than this. Bitcoin is different. The simple answer, and I know this is hard for people to understand, but charts represent human emotion. It's buyers and sellers. Do you like it? Do you love it? Do you hate it? Do you despise it, right? So buyers versus sellers. Emotion changed human history, right? You could go back to ancient Egypt, Greece, Rome, the tulip mania, all of those, it was the same. Greed and fear. And so charts are really the same. Doesn't matter if it's Bitcoin, if it's a housing chart of real estate, or if it's a stock chart or a commodity chart. Generally, you treat them the same because human nature is the same. Greed is greed in Bitcoin, just like greed is greed in GameStop in 2021, is greed is the same all the way across. All right. And so ultimately, you look at this and you say, okay, so Bitcoin is still holding this major level of support. So we give it the benefit of the doubt, but you do not. And I repeat, you do not want to see, just like with Nvidia, if it breaks and confirms below here, you probably get a bigger move down. Obviously, we'll start looking at like 109 area here as your next level, but watch this level here, this trend line on Bitcoin. A couple big stocks here in motion today. We know that Warren Buffett picked up a large stake in UNH, big pop there. Congrats to Lawton, who runs the dividend trader in smart money stocks and ETFs. He had this in his portfolio. What a move on that stock today. AMAT, we talked about in the game plan this morning. Big drop, basically trading at the lows. More and more of the semis, except for Broadcom and Nvidia, have started to break lower. I guess AMD's in that same group. That one's held up very, very well as well. But nasty day here on Applied Materials. Okay. Couple other things to go over here. Let's take a quick look at ETH. ETH, again, going back to crypto, a secondary pullback. I still think ETH could still have one more move up, at least piercing double top. It's very rare that charts come up so close to double top and don't pierce. And so I would almost expect maybe, I mean, I guess you could see a pullback here, right? I mean, I guess this would almost make sense to see a pullback to the former major highs here at around 4,075. And then maybe then we get that next push up to pierce the 4,800 to 4,900, maybe even pierce 5,000 even number. But again, ETH pulling back along with a lot of the altcoins and even Bitcoin here over the last couple days. Gold, guys, again, remains slightly bearish on the charts. It still has to get through. For it to turn bullish, it has to basically get above 34.15 on this chart. Next support on the way down would be $3,270. Okay, next up, let's take a look at silver. I've kind of been just neutral, biding my time on silver, whether it pulls back into support at 34.65 or resistance around 39.70. But you can see, again, it hasn't done much in the last week or two. Just be patient. Remember, folks, everyone wants to be in a trade. It's like a gambler mentality. You always got to feel the action. You got to be in the action. But in essence, the best thing you can do for yourself is recognize when a chart is not giving you a strong bias and just sit on the sidelines. There's nothing wrong with waiting and then getting a much better entry. Too many of us try to force trades and then get in bad positions, and that's how we take big losses. Listen, a big loss will happen from time to time because trading and investing is a probability game. All right. I do believe that you can make yourself a 75, 80% win rate. But again, that still leaves 2.5 trades every 10, essentially, that can go against you. But again, the key is win rate needs to be high. That is the game to get to success. Just like a casino. Casino knows that it's not going to win. Not every gambler is going to lose money in the casino. But if you have a million guys coming in, a million gamblers, will they make money on 900,000 of those? Absolutely they will. And of course they'll lose on some, but it's overall, do they make money doing that? The answer is heck yeah, they do. And they make, I mean, listen, a casino is like the best business in the world, really. I mean, you get people to come in, the odds are against them, and they're willing to put down money and just play. Here in the market, we could be the casino. We can have that win rate in our favor, but only if we control emotion. You must control emotion. So important. All right. Couple more charts to just go into here, guys. If we take a look here, let's go over to the U.S. oil chart. Again, oil is down again today. We know that it's in weak position. Big bear flag right here. It broke down, got a little bounce yesterday, coming right back in. I'm still pretty steadfast that within a week, we probably test this level here. It's right around $60.65 per barrel. That would be your next big support level. And then lastly, natural gas here, guys. Let's take a look at nat gas. And nat gas today is bouncing. We talked about this morning, but look at how it's struggling right at the former level here. Now, we didn't confirm to the downside, so this is only minor resistance, which means, again, the odds still favor a pullback, but not overwhelmingly, versus once you confirm, it really is overwhelming odds that are favoring a pullback. All right. So again, it is resistance. It's just not mega resistance here. So let's watch this into next week. No trade for me. The only level I have that I would consider a trade would be down here at $2.63 on nat gas. And I'd have to reevaluate it once we get down there. All right, guys. So great week. Great week. Market volatility, some earnings, although the mega caps are over. In about a week and a half, we'll get Nvidia earnings. Next week, Jackson Hole. We'll get some more jobs data in a few weeks. And obviously, we're going to start to see big money coming back into the market as we get into September. So my guess is, and my trade for next week, and I'll give it to you guys here, is to buy volatility. Buy volatility. It is so low here. I want to show you guys this on the VIX. Let me bring up my chart here, and then I'll flip it over. So if we look at the VIX, guys, the VIX again, let me bring it up. The VIX is my play here. All right, the VIX again is sitting below 15 now. Historically, anytime it gets between, let's say, 15 and 10, if you buy into it, eventually you get the pops. And at this point, we had bad PPI data, so inflation is starting to creep in. The jobs data is starting to get weaker and weaker. The markets are extremely complacent. I had so many people posting comments that the markets will never go down. This time is different. That means complacency is at a major high. And that to me spells start accumulating the VIX. So for me, at least, the VXX is the play here. The VXX, you can see, is all the way down, trading right around 39. So it'll be interesting to see next week, but I'd be looking as in the next week or two for a pop back to 45 to 50 on the VXX. As volatility starts to pop, I do think that we'll get a spike in fear at some point here in the near future. So that's my trade going into the weekend for next week. Let's see how it goes. As always, thank you guys so much for tuning in and supporting a data-driven analysis technique called technical analysis. Again, data and charts, no BS. There's no room for it. Go to social media. You want that. If you want to be told what you really want to hear, social media is there for you. If you want the latest narratives, turn on the mainstream media. Here, charts. Whatever the charts say, that's what I'm telling you guys. All right. You guys have a great one. Thanks so much for being members, guys. I will talk to you soon. Take care.